Is this Bitcoin rally over, or is it just getting started? After a massive push to break its all-time high, the market has cooled off and uncertainty is creeping in. But are we heading for a major correction, or is this just a bit of chop before the next move up? Well, in this video, I'm breaking down how Bitcoin is holding up better than all other digital assets, why Solana's wild ride could test your patience, and why investor sentiment is shifting away from speculative plays completely. Let's break down some insights from Glassnode. In late January 2025, the Bitcoin market made a strong attempt to break above its all-time high and push back into price discovery. But despite the excitement, the rally just couldn't muster up enough momentum. Since then, we've entered a phase of contraction and consolidation, with price momentum sharply declining across the board. To put this into perspective, here's how the numbers stack up. Bitcoin surged over 48% in November, but has since slid almost 6% in February. Ethereum went from a strong 60% gain in December to a 17% pullback today. Solana, which saw an impressive 53% rise in November, has dropped a staggering 33%. And the meme coins index, well, they skyrocketed 90% in December, but have now plummeted by 37%. What's fascinating is how these assets react to different market environments. Solana and the meme coins have performed exceptionally well during bullish trends, benefiting from strong upward momentum. However, they've also proven to be the most vulnerable when sentiment shifts and experience the steepest declines. On the other hand, Ethereum has struggled for most of this cycle, consistently lagging behind. Although it has managed to edge ahead of Solana in recent days, there's still no convincing evidence of a long-term breakout. The recent slowdown follows a strong rally across digital assets, but each has navigated this cycle differently. Bitcoin has held up well, currently trading about 3.5 times higher than in April 2023. Ethereum has struggled, fluctuating between just 1.3 and 2 times its value from that period. Solana was the clear leader, skyrocketing by almost 12 times its 2023 price by early January, though it has since pulled back quite a bit. The meme coins index also saw a huge surge in mid-2024, peaking at 5.2 times its 2023 level, but has since taken a sharp hit and is now the weakest performer of the group. What this tells us is that Solana is a double-edged sword. It can deliver the strongest upside but also the sharpest corrections. On the other hand, Bitcoin's steadier path underlines its resilience as a benchmark for digital assets. And for memcoins, the decline in investor demand points to a changing risk appetite in the market. These moves all come down to capital inflows. Looking at the monthly change in realized cap, Solana has consistently attracted more capital, helping drive its price higher. Ethereum, on the other hand, has seen the weakest net inflows among the major assets, explaining its underperformance. Meme coins have had several sudden surges in capital inflows, but these spikes have proven unsustainable. Recently, inflows have slowed across the board, with Ethereum and meme coins even flipping negative, signaling capital outflows. This isn't just noise, it suggests waning speculative interest and possible rotation out of riskier assets. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. The slowdown isn't limited to spot markets either. Perpetual futures shows a sharp drop in open interest, reflecting reduced speculative activity and lower cash and carry yields. Over the past 30 days, open interest changes have looked like this. Bitcoin is down 11%, Ethereum has dropped 23%, and Solana's only down 6%, showing a bit more resilience. But meme coins, they've absolutely tanked, with open interest down a massive 52%. This widespread retreat of capital suggests that speculators are unwinding their leveraged positions as market momentum weakens and uncertainty rises. Meme coins, as expected, show the most extreme decline, which aligns with their highly speculative nature. funding rates for perpetual futures add another layer to this story. While Bitcoin and Ethereum maintain slightly positive funding rates, indicative of their deeper liquidity and stability, Solana's funding rates have edged lower and turned negative. Meme coins, meanwhile, have seen rates turn sharply negative, meaning short positions are dominating, and many traders are either closing out or getting liquidated. Institutional interest, as seen through ETF flows, continues to favor Bitcoin. While Bitcoin ETFs saw over $200 million in daily outflows last week, buy-side activity quickly rebounded, signaling strong institutional demand to buy the dip. Ethereum, on the other hand, has seen little movement, with ETF flows staying near zero. This underscores Bitcoin's dominance in institutional portfolios and Ethereum's ongoing difficulty in attracting sustained capital inflows. Right now, Bitcoin is currently trading between $1,000 to $5,000 above the short-term holder cost basis of $92,000, a key level that often separates bullish and bearish phases. Historically, after hitting a new all-time high, Bitcoin tends to correct toward the lower band of this model, which now sits at $71,000, a potential downside target if weakness continues. We've seen this pattern before, with rallies into price discovery followed by periods of consolidation in May and November 2021, as well as April and February 2024. During these phases, short-term holders are often tested as the market searches for a new equilibrium. Now, Bitcoin is at a crucial point. Either it stabilizes above its all-time highs if demand stays strong, or a deeper correction unfolds, mirroring past post all-time high pullbacks. If that happens, panic among recent buyers could accelerate selling as their positions slip into unrealized losses. What happens next? Well, only time will tell, but as always, we'll keep a close eye on these on-chain metrics to track market sentiment and any potential future moves. So, to wrap things up, it's clear that Bitcoin continues to stand strong in the face of recent market turbulence. While other assets have seen sharp declines, Bitcoin has shown impressive stability, driven by strong institutional demand and its role as the benchmark for digital assets. This suggests that, even though we're in a period of consolidation, Bitcoin's long-term outlook remains solid. Solana, on the other hand, is a bit of a roller coaster. Its dramatic gains earlier in the cycle were impressive, but those big swings come with significant risks. If you're looking for high rewards, Solana can deliver, but it's definitely not for the faint-hearted, given its volatility. Finally, we're seeing a shift in market sentiment overall. The decline in capital inflows, especially for Ethereum and meme coins, signals that investors are becoming more cautious. Speculative activity has dropped, and there seems to be less appetite for riskier assets right now. This could mean that the market is beginning to favor steadier, more established assets like Bitcoin over the more speculative ones. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.